to point out the moves that are happening in the Australian dollar because it's really come front and centre. And it's amazing just how the sentiment has changed. It's gone from the superstar darling of the FX markets to now being the ugly child of the G10 region. And really what we've seen is the market build up this big positioning, long position going into mid-March, where the Australian dollar traded up to 71.87. A lot of that positioning now is getting unwound. And the investment case and the mantra behind the Australian dollar seems to be changing. We're seeing global growth being called into question, given the high oil prices, the move that we're seeing in the cost of funding with rates moving higher. And so the global growth is getting called into question. So Aussie dollar is being your sort of whipping child of your funding currency effectively for expressing that vulnerability in global growth in the short term. We're also seeing the Australian dollar act as a risk proxy. I guess if you overlap the Aussie dollar against the US dollar against the S&P futures, you can see a very strong correlation there as well. So with S&P futures, testing the bottom end of their recent range, we have seen the Aussie dollar sort of revert to an out-and-out risk proxy coming through in this markets. But I think against the US dollar, what we've seen is a move, really a range in the last couple of months of 71 to 69.5 cents. And we sort of traded on the 11th of March, and we've broken through those levels now. And when we did break through those 11th of March lows, that spike low, we've seen the selling really accelerate playing through. Now, will we see further sellers playing through? Obviously, that's what we're watching. But it's not just been against a stronger US dollar story. As you can see here, the Australian dollar has underperformed all currencies, even major currencies across the last 5 days. Even things like the Brazilian real and the Colombian peso and some of the LATAM currencies have done pretty well. But it's been broad-based. We've seen Euro Aussie moving up for 8 days now. Aussie against the Kiwi, has dropped about nearly 300 pips on those highs. Aussie yen's, finding sellers. And certainly, this idea about Australia being a massive net importer of its energy needs, both on the crude side and the refined product side, with nearly 98% of those imports coming from Asia. And with the Straits of Hormuz obviously being closed, the last of the shipments is now making its way there. So we are talking about shortages coming through, and that's going to have a lag effect, and that's going to have an impact on the Australian economy going forward. Depending on how long held the Straits of Hormuz is going to be closed, it's going to obviously impact that situation. But what you're seeing now is the Australian dollar, the world had a love affair for it, and now it's in the doghouse. And that's really because global growth is starting to be called into question. We're seeing rate hikes still very much in the RBA setting. But also what we're seeing is that risk proxy as well. So will the Australian dollar continue to find sellers against the US dollar, but also against the cross rates as well? Let's have a look. Trade at Pepperstone.